So let's just touch on this ISM number, a bit disappointing, and this is why we could actually see the Dow now slipping into negative territory and in fact stalling somewhat.
It's absolutely seesawing all over the place. You've got three important bits of data out today. It was the job data that was slightly better than expected. You had the consumer spending, which was slightly below expectations, but this is quite a big number, and it was way, way below. I think the expectation, like you mentioned, was 54.5, and it came out just above 52. So it'll be interesting to watch the Dow and see what it does. I know the Dow was bouncing very nicely this afternoon after a negative
around
close.
0.5% or
Correct,
so.
which kind of wiped off the negativity of yesterday. It'll be nice to see what it does later on into the evening and how that.
And this is the time where we see Ben Bernanke saying that no more quantitative easing is required. Also, construction numbers out in the US, and that also pretty much dire.
Correct.
So
it's very murky, you know. So you've got really good job data every now and again, but then you've got not so good manufacturing data. So the market commentators out there are saying, you know, should we or shouldn't we have a quantitative easing? But you just imagine Brett Bernanke says a few words and the markets react immediately. It's quite an amazing amount of power that one
absolutely.
individual
I was going to say, I wish I had that kind of power.
I wish I knew what the ultimate outcome will be, though. It is very, very difficult to sit back and say, you know, this is what's going to happen. But I think generally speaking, the average amount of data coming out of the States is definitely showing some sort of a recovery.
But in South Africa, great manufacturing data that came through, 57.9 for the month of February from around 53 odd in January. So a very different scenario that is playing out. And when you see what our equity market did today, flat slightly to the positive. We were in negative territory a little earlier, not really responding to the good numbers out of SA.
I think, you know, look, it was an important number and it's very important for us. But, you know, the South African market, interestingly enough, specifically your majority, you know, top 40 shares actually take the cue from what happens overseas. So we're very, very much linked to that. So I think it was a factor really of the gold price coming off very heavily yesterday, as well as the strengthening of the rand that really put major pressure on our precious metals producers such as gold and platinum, and that really shifted the market down. There's a bit of a sell-off on Billiton and Anglos. The only major recoveries there was actually some of the financials, which aren't as internationally available as some of the miners, and that actually led forward, and we actually closed up very, very nicely from a financial perspective.
And it's interesting because we also saw a much stronger local currency today, despite the fact that gold and platinum were in positive
It was really
territory.
interesting. It was just rand strength coming through. If you had a look at the euro is actually weakened ever so slightly from 1.34 to 1.33 against the dollar. But if we have a look at you know, dollar weakness, we've actually got rand strength coming through here, which means there's been a lot of inflow probably into our bond market. The interest rate differential is still considered very, very acceptable to some bond buyers at the moment.
Absolutely. So let's just touch on the top 40 index. We've got First Rand up 3%, Nedbank up 3%, RMB Holdings up around 2.5%. So yes,
so the financial 15 probably through the roof. African Bank also up there at almost all-time highs again, close to 40 rand. So why, you know, why them? I think on the back of pretty decent results. I mean, banks coming off some very low levels. I'm still very tentative about it. I'm not saying jump in.
But hold on, did we get a downgrade on some of the banks yesterday by Moody's?
Well, you know, a lot of
not important.
No, look, I mean, I think that's expected. Everybody tends to jump ship when Moody's downgrades UBS and all the other banks. But I mean, it's part and parcel of the current economic environment that we are in, even though those downgrades exasperate the situation. But I think having a look at recent results out on South African banks, I think the general trend has been for some deep value players out there to start accumulating stock. Again, my point of view is still a little bit more, you know, negative towards banks at the moment. I don't think it's time to jump in, but I just think some value buying currently.
So go for it.
On
Tell
the
us
back on
where's
my money at the moment? Well, I've mentioned it time and time again. Exoro and Kumba, you know, have been my two favorites for many a year.
Some would argue that these stocks aren't looking that cheap anymore relative to what they were last year.
Well, they keep on getting more and more expensive, though. So it's all, I mean, cheap is relative at the end of the day. I think if we have a look at the dynamics of the industry and where that is going and the specific companies and what they produce, I think there's still a lot of value left in those two. So, you know, it does depend on the individual buyer, and you could argue that Kumba at the moment is a little bit stretched, but I think looking forward to what these companies can actually still bring to the table, I would still say they're great places to be. I'll be far happier being in an Exoro and a Kumba right now than being, say, in a Nedbank or an Absa currently.
So let's also touch on Liberty. Out with results today, and we saw the core numbers coming through up around 15%, and the CEO saying that they've actually readjusted the balance sheet so they can weather any storm.
That's a nice thing to say. I mean, I can, you know, we can weather anything. I hope they can. I think that'll be great. I mean, look, Sasfin Securities in general, we're not very big buyers of, you know, insurance businesses in general, in any case. So it's not a stock that I look at tremendously. But I did have a look at those results.
Why
at
is
least try
that? I mean, I know that I've spoken to a lot of investors and they say they're difficult to understand.
Well, that's exactly what it comes down to. I mean, we are a conservative house and we like to go for your more, not conservative companies, but companies that are not easier to understand, but easier to value. And it's very, very difficult to value your average insurance company in general. So we tend to steer clear of that industry at the moment. So not something I've looked at tremendously, but you know, I did pick up on Spur and EOH coming out.
Yeah, so let's touch on this is my next stock.
There.
Revenue up around 16.2% on Spur. Headline earnings per share up around 19.4%. A good Christmas season is the company.
It's a good little company, actually. It's very, very hard to get hold of stock in any meaningful supply, but having a look at the 6 monthly results, some excellent growth there, some good expansion outside South Africa, very nice numbers, good little dividend payer as well. I think it's something that you can consider for your portfolio if you want something a little bit different. It's in a nice industry, you know, there is a lot of growth in the, not fast food, but it's almost like leisure, you know, restaurants in South Africa, family related, you know, Spur, Panarottis and John Dory's. So,
yeah. And we actually saw even within the Panarottis space, which we know is very highly competitive, the pizza space overall, we even saw turnover increasing there above 13%.
Correct. So I was quite impressed with it, very, very happy, and I think the share price up about 3.5% today. Interesting enough, I think Liberty's share price down a little bit on the news.
Yeah,
and their
Liberty
results,
down around 1%, Spur in positive territory. Spur relative to Famous Brands, could you even compare the two, and which would be your pick?
I guess you could. I mean, Famous Brands is more fast food related. It's not really restaurants that you sit down and eat. You know, Famous Brands also has a large retail division on all their products, their sauces and so on. I know Spur has that, but in a slightly less kind of way. I would probably go for a Spur. Frankly, I would quite like Taste at the moment. I think Taste is the beginnings of a Famous Brands going forward. So from a value perspective, you want to bring a little risk into your portfolio, Taste is an option.
Taste with a bit of jewelry.
Yeah, there we go. NWJ.
To go very well together. Thank you so very much, Nicholas.